Robotic taxis may account for over 90% of Tesla's market capitalization by 2029. This change will essentially change the business model, which was based mostly on one-time car sales with some software, into a recurring revenue stream with very high margins. In addition to improving travel safety and changing how we move about, autonomous vehicles will also be very profitable for Tesla and very advantageous for stockholders. Tasha, the stock price may rise significantly from its current level to $2,600 per share by 2029. We have profited, as you are aware, from our ETFs. This stock has increased from $5 at the time of our initial purchase to $400. Even though a lot of the positive news has already been factored in, we think it will continue to do well in the long run. On the other hand, a fresh set of equities stands to gain on NVIDIA's foundation. NVIDIA has created the conditions for a perfect storm for Tesla. A possible multi-trillion-dollar market value surge, being a hardware stock with some software components. We will go in-depth into the game-changing tactics that might propel this incredible upsurge in this video. This includes the breakthrough software as a service, SaaS, model from Tesla and its ambitious move toward autonomous vehicles. We will also look at other outside factors and crucial choices made by Elon Musk that have the potential to push Tesla's stock over its previous highs. We'll examine everything from changes in the world economy to advances in technology to help you understand why leading analysts like ARK Invest are so bullish on Tesla's prospects. Come along as we examine the possible ramifications for investors, the automobile industry as a whole, and the future of transportation. Fasten your seatbelt and prepare for an enlightening voyage through Tesla's technological and financial development. Please remember to tick the like and subscribe buttons before we continue. Welcome to Tesla Stock News, and let's get started. Consider aggregating the market capitalizations of major tech companies such as Apple, NVIDIA, and Tesla. It comes to an astounding $7 trillion. ARK Invest, an investment firm, predicts that Tesla might reach this amount on its own by 2029. Yes, Tesla's market capitalization has the potential to surpass both NVIDIA and Apple's present valuations by $1 trillion. The price of NVIDIA's stock has increased dramatically lately. In order to achieve comparable growth, Tesla's market capitalization would have to increase significantly over the next 5 years, essentially adding the value of two NVIDIA values. According to ARK Invest's analysis, Tesla's foray into the robotaxi market may be the primary factor behind this enormous growth. This move could cause the company to pivot from selling cars as its primary source of revenue to producing high-margin recurring revenue. This move has the potential to completely change not just the financial scene for Tesla, but also our everyday commutes. The use of autonomous vehicles on the road is expected to increase efficiency and safety. It is possible that this change will be extremely profitable for Tesla's investors. But Tesla has encountered difficulties with production. According to recent updates, the corporation is incorporating some of those cutting-edge production techniques into new car models even if it has moved away from an earlier strategy. This flexibility may be essential when Tesla ramps up manufacturing to fulfill its lofty objectives. Representation that is current and accurate is important in the tech industry. It surprises me when conversations on cutting-edge technologies utilize old footage. It begs the question of what stories the big media outlets shape and what interests the people who run them are showing. In the automobile industry, using a SaaS model is becoming more and more popular. Imagine Tesla taking a calculated risk by switching to a fleet sales model, which would spur the creation of companies that would manage and operate these fleets. Firms rooted in the conventional gasoline-powered vehicle sector may find this transition to be very profitable. Because of this change, which signifies a fundamental shift in business strategy, organizations are now able to take advantage of the SaaS model's efficiency and scalability. This change has the potential to turn automobiles from standalone goods into parts of an ongoing service and income source. It might open the door to increased sustainability and profitability, establishing a new benchmark for how automakers run their operations and contend in a market that is becoming more digitally and ecologically aware. According to this plan, Tesla might charge a commission based on the distance traveled, just like Uber does. However, with its advantageous cost structure and total control over the network, Tesla might be able to demand a bigger percentage. Tesla may be able to secure a sizable portion of the market if it sets rates that are similar to those of Uber and Lyft, especially in the beginning, since the first 50% of miles switched to robotaxis could determine the future economic landscape of the sector. Early adoption and scalability of this model are imperative. Returning to ARK Invest's audacious projections on Tesla's future worth, let's recap. Inside the finance media, doubt persists despite their previous precise predictions. If ARK's forecasts come to pass, Tesla's market capitalization will soar to unprecedented heights in the following years, echoing the company's previous record-breaking stock price spikes. When we look back at the sharp fluctuations in Tesla's stock price, we can see that in late 2019, shares were trading for about $22. The stock price skyrocketed, rising by an astounding 1,700% in a few months. In addition to being a financial success, this extraordinary expansion caused much consternation and debate in the financial community. The audacious forecasts made by ARK Invest point to an even more astounding future for Tesla. Based on their analysis, it appears that Tesla has the potential to increase its market value to a range of $7 to $8 trillion in the next 5 years. To put this in perspective, a similar surge would create new records in the history of the stock market in addition to surpassing the sharp rises of late 2019. This anticipated rise would be a noteworthy turning point, highlighting the revolutionary effect of Tesla's strategic shift toward autonomous technology and its capacity to completely reshape the global automotive and technological landscapes. This audacious prediction depends on Tesla's ability to successfully enter the autonomous driving space and other cutting-edge endeavors. It envisions a time when Tesla leads a revolution in mobility and is more than just a car maker. The significance of attaining this valuation is immense, indicating a time when Tesla's impact beyond conventional automotive frontiers and might establish novel paradigms for our understanding of transportation and technological integration. Even though autonomous technology has advanced significantly, Tesla's stock is already selling about 60% below its November 2021 top. This disparity draws attention to a startling difference between the stock market price of the company and its technological advancements. The rise predicted by ARK Invest would not signify a 14 to 15 times increase if Tesla's stock were still at its 2021 top levels, but rather a logical continuation of the company's already remarkable growth trajectory. This disparity implies that the market has not yet completely assessed or factored in the possible influence of Tesla's advancements in autonomous driving on the company's stock price. The company's value may be reevaluated as the technology advances and becomes more essential to Tesla's business strategy. This might bring the stock price closer to the company's technological accomplishments and prospects. Tesla's stock offers a compelling story of potential outcomes. Had it not been for a number of worldwide disturbances, including financial stimulus, increasing interest rates, and pandemic lockdowns, the stock might have surged over its historical peak. Furthermore, some people think that Elon Musk's attention has turned away from Tesla's primary goal due to the media hype surrounding his business endeavors, particularly his acquisition of X. If these things hadn't happened, Tesla's shares could be worth between $600 and $700 right now.